Good morning, guys. It's going to be our Summary Markets episode 123. We're going to start off by talking about the market profile of ES on Friday. Then we're going to talk about the calendar going into next week. We do have a couple of major events next week. We have the consumer confidence on Tuesday, Fed talk on Wednesday, and so on and so forth. So we'll get to that after the market profile here. So starting off with the market profile on ES, it was extremely bullish, basically one time framing the entire way up, and it had a bunch of halfbacks trading bullishly as well, which we'll go over here if you guys are not familiar with those terms. So basically a one time frame is when we start off with the session. We can see the A session here. The B session broke that high of the A session without testing the halfback or the low of that A session, so you started a very strong uptrend. Then with the C session, it actually tried to balance out. You did not break the B high, but you held on to the halfback of B. So if you're not familiar with the halfback term, basically it's exactly what it sounds like. It is the halfway point of the previous session, and you are pulling back to retest that, but you are holding on to it as support, and then from there you can take a one-to-one trade, which would basically be a long on the B middle session here, and then targeting the high with a stop below the low. Because it is the middle of the candle, the halfback, it is giving you a perfect one-to-one risk to reward, but these trades typically do not have a very high strike rate unless the day is extremely trendy, which we did see on Friday. So if we continue here, we can see that C session was creating some balance. You were not able to break the B high or the B low, but it was still leaning bullish because you held on to that halfback. So then the D session continued the one time frame. You did break above the B session high, and then so on and so forth. E tried to balance, F broke out, G tried to balance, H broke out, and then you had a little bit of balance on I and J. But you can see here that all of the balance sessions are putting in higher lows. So you can see that we are continuing higher, even though price is trying to balance out. And what I mean by balance is basically just finding value, trying to range. In this case, it was distributing, trying to find those buyers. And then in the K session, we were able to break the high a day. And then with the L and with the M, we were able to break the high a day as well. So if you guys are familiar with Dalton's teachings on a trend day like this, typically, if you want the trend day to be extremely one-directional or extremely biased, it needs to close on the extreme. So in this case, it would need to close on the high a day, which it did. It's kind of hard to see. You probably can't see it on stream, but there is a little arrow right here that indicates where that session was closing, and it closed literally on the high a day. So this is the most bullish example you could possibly have. VWAP was trending very bullishly. You were one time framing up. You were never able to break the halfbacks of multiple sessions, and we closed on the extreme of the day. So this was extremely bullish going into this week. Now, how could we have predicted this, right? We talked about this on the Friday live stream. If you guys watched the live stream, we did talk about the pre-market session and kind of the trade plan for the day. But just going back for a small recap, if you guys missed the stream, the pre-market profile was extremely bullish biased with that P-shaped profile. Now, the only downside to having a pre-market that is extremely biased is you have what's called an overnight inventory. So typically, if it's extremely biased to one side or the other, you do have a potential to fade that move in the first session or the second session, the A or B session. So in this case, it being extremely bullish to the upside, we could have faded that to the downside in the first A or B session, but as we just went over, it did not do that. It just continued to break the high of the overnight and push higher. So we had a very bullish overnight session, and then it was confirmed with the opening session on Friday. So going into Monday, let's take a look at some levels and see what we're going to be looking for next week. So the main level that we were watching up until Friday was that gap on that 3,900 level. That was filled beautifully on that massive day on Friday, giving 120 points, a plus 3% day. Okay, so let's get rid of some of these older levels. All of these levels have been filled, and let's see what is remaining. So let's go down to the 30-minute here. And we're going to have to zoom out because this value is pretty old. So we have a value area high level that has not been tested right here. Let me hide this really quick so we can see the levels more clearly. And then we have value levels way up here that have also not been tested. So we can mark this as previous value area high, and we can mark this as a previous value area low. So the only value inside this kind of area right here is pre-market value. Now, typically we don't want to mark out pre-market value because the pre-market value is not going to be heavily traded. It's not going to have a lot of value to either hold price or reject it. So we really only want to pay attention to the actual value in the cash session. But what we can note is there is a very strong node up here on this cash session, which also lines up with that pre-market value. So we do know there is some value around that level there. So we can go ahead and mark that as a POC level that we want to keep our eye on, which is around 4,017. So moving forward here, the levels that we want to keep an eye on are 39.36. That is the value area high that we have not tested just yet, because we have broken through that value area low, which we didn't mark out, but we can mark it out just so you guys can see here. Basically, this level here was the value area low of June 10th. And if we hold above that level, we have a very high chance to get to the value area high of June 10th because we have that 80% rule where we're retracing into old value. Okay, so look for 39.36. If we can consecutively hold above that level with a couple of 30-minute sessions, then we want to look for that 4,017 POC. And then we're looking for a value retrace of this 40.71 to 41.28. Okay, so those are the bullish levels going into next week. Now, bearishly, if we look at this value level right here, which is 38.75, if we continue to find value below that level, then it's most likely going to fill in this inefficiency here. Because the market was so extremely bullish on Friday, you did not give the market enough time to really auction or find value on these lower levels. Now, typically, if you guys are familiar with my stream, we talk about the tree pattern, where you have those trendy days, but it forms what we like to call a tree, where it builds a lot of sturdy branches as it's pushing up or pushing down. So when it builds these branches, that is creating proper value. So in this case, if it were to fall back down, you have all these branches to support your fall. Imagine that you were like at the top of a tree and you slipped off and you started falling. If there were no branches below you, it would be very easy to fall down. But if there are a bunch of branches below you, it can break your fall. So that's basically what we're seeing here on price. We're seeing a tree that doesn't really have a lot of branches. So if price were to push down, it could very easily push back down into like 37.80 if a lot of those economic numbers that we're seeing next week come out bearishly. Okay, so any value found below 38.75 would be pretty bearish to fill in these price inefficiencies all the way down to the previous low, which was way back here around 37.82 to 37.80. Okay. So actually, before we go on to Nasdaq, let's talk about the calendar really quick, because we mainly focus on ES, and I know a lot of you guys who watch my videos are also following along with ES mainly. So let's talk about the calendar really quick. So moving on to the calendar, it is pretty hectic next week. We do have a couple of major events. You can see these, anything that's coded red here, colored red, is a major event. So we have consumer confidence on Tuesday. We have Fed talk on Wednesday. We have core PCE, this is huge, on Thursday. And then we have PMI manufacturing on Friday at 10 o'clock. These are all the big events. We have a couple of smaller events on Wednesday, durable goods, pending home sales. This one is going to be very major, because if we go back to, let me go back here to last week, we had the new home sales come out on Friday. And typically the new home sales are not a major economic mover. Typically those numbers will come out, the market will move for like a couple minutes, and then it'll just forget about it basically right away. What we saw on Friday was that number came out massively above expectations. They were looking for 590,000 new home sales. They got 696,000, so over 100,000 over expectations. And we saw one of the biggest market buyers we have seen in weeks. We were watching that live. If you guys go back and watch the live stream on Friday at 10 o'clock, you can see that buyer come in, and I think it was like 5,000 to 7,500 contracts that they market bought. So massive market buyer, most likely a bot, because it was literally at 10 o'clock, like on the dot when the data came out. But going back to what I was saying, this pending home sales here month over month is going to be a big number because the market reacted so majorly to the new home sales. So if this pending home sales comes out like way below expectations, probably that massive buyer that bought because of the new home sales data is most likely going to start closing or potentially even flip to the short side. Okay. So looking at Tuesday, like I said, keep an eye at 10 o'clock, Wednesday, 9:30 in the morning, Thursday, 8:30 in the morning, and then Friday, 10 o'clock as well. Okay. All right, moving on to Nasdaq for all you guys that are not ES traders or people that also follow Nasdaq. Let's take a look at this. We're going to delete all of our old levels here. First off, let's start on the daily. So basically what we're watching moving forward bullishly is this major distribution right here. So if price continues to push up, we are going to be retesting all of this older value. So there's a couple of things you guys can do here. If you're swing traders, you could just take this entire range as a composite, and we could grab the value area low here and the value area high here. So that would be the composite value. If you guys are more of scalpers, you probably want to go to a lower time frame and actually individually grab these value areas. Funny enough, the levels that I would take is that level there and that level there. Because they are so close to the composite levels, I would probably just keep the composite, okay? So keep an eye on that range. You do have some levels here and here, but these have also already been broken. So price has already retraced that value. So like I said, you would have to go all the way back to these previous levels to get that older value target. Okay, so bearishly, let's move on here. So same thing that we said on ES. You don't have a whole lot of value below you except for the major node on Friday. Below that POC node, you don't really have any branches except for this level here. So we can mark out this level as a potential POC, but then below that, we really don't have much unless we go down here to the previous value. So we have the previous value area high there and the previous value area low there. So if economic data comes out bearishly on Monday and Tuesday, we are most likely going to come back down and retest these older value levels. Okay. All right, moving on to Bitcoin. Let's take a look at what's going on here. So Bitcoin is bouncing off the levels that I gave you guys last week with that POC node around 19.2 and then that older level around 19.8 that is acting as major support. You did have a day where you kind of swung below that level and tested the lower portion of that node. So this whole node right here, you have the lower portion there and the upper portion there. So we did bounce off that lower level almost exactly. So if you want to, you can go ahead and mark out kind of that lower level of that node. And that is support around 17.8. Now we are kind of bear flagging back into that previous node, which in this case would be anywhere from this level here, 22.4 to 23.2. Now we could move this level up to the high, so basically take that entire node there. You could also draw a rectangle, like if you wanted to draw it out like this. It doesn't really matter, whatever way you guys want to do it. But basically just know that we are bear flagging into a resistance node. So if we can't hold above that 22.4, very likely going to come back down and retest the value around 19.2. If it does hold back above 22.4, look for that 24.1 level and then back into that previous range value around that 26K. I would probably lean slightly bullish, seeing that this is a bear flag and it's kind of losing steam here. Or sorry, lean bearish. I think I said bullish there. I would lean slightly bearish here until we can reclaim 22.4. Okay. Moving on to Ethereum, let's zoom out here and get our profile. So Ethereum is bear flagging as well, kind of breaking this downward channel. You did bounce off the start of our buy zone there, which was anywhere from 880 down to 800. So we are finding a little bit of support there, breaking out of the bearish channel, But same thing here. It kind of looks like a bear flag. And if we want to, we can clean up the chart here a little bit. Let's get rid of some of these older levels. And we can grab this impulse down here, and we can see where this is pulling back to. And if we look at this, this is pulling back to the 382 perfectly. So if you guys use my Fibonacci technique, basically we determine that if it's failing the 382, this would be a bear flag, and you're kind of still stuck in that accumulation phase. So as long as it stays below the 382 and above the low, you're kind of stuck in this accumulation zone right here. So typically, if you're going to show very strong rejection of that 382, it's going to come back down and see if it can find value back below the supports where we kind of found support before. So around 880 to 1,000 here. If it does start holding above 1281, look for that 1525, which is that 618 fib. That would be the bullish target. Okay, one last thing to take a look at before we call it a video is how the dollar and the other currencies are doing. So the Dixie chart here is kind of getting a little double toppy. It's almost like a cup and handle. So it's slightly bullish. But if we do see any weakness next week, it is most likely going to pull back, probably back to that 102 level. You can see that the dollar has been gaining a lot of strength against the yen because of what's going on in the Japanese economy. They are basically screwing themselves with inflation. If you guys are keeping up with the bond market there, they're kind of testing levels that they really do not want to get above. So keep an eye on the yen there. But looking at the euro, if the euro continues to push down here and the yen continues to push down, which in this case the dollar would be going up against the yen, then the dollar will be gaining a lot of strength, which is not good for the US equity market. So keep an eye on the Dixie chart and the US dollar to the yen chart. If these continue to break out next week, I would be a little worried for my ES positions. But all right, guys, that is it for the summary markets. Hopefully you guys enjoyed this video. Make sure to hit that like button if you did. I will see you guys next week, Monday through Friday at 9:30 in the morning for our live trading session. See you guys there.